Hi everybody, this is Dr. Hamid with your Math 120 class. Today we are talking about section 8.2, which is about income tax and personal taxes. Okay. Now our main goals in this section is to look at main terms used in tax calculation. For example, gross income, adjustable gross income, taxable income, and then how to calculate actual tax here. Okay. Um, we will also look at how to we will look at how to calculate FICA taxes, federal insurance contribution taxes, which is Social Security and Medicare, etc. We will look at some problems, some examples, scenarios. Okay, how to where we will calculate the actual taxes owed by citizens here. Okay, let's start with the income tax here. Okay, income tax is a percentage of your income collected by the government, okay, to fund its services and programs and all the things, all the facilities we get from the government. Okay, now this is basically income tax is always again once again it's a percentage, okay, percentage of your income, total income. As I said earlier, we will learn basic terminology about taxes and we will look at fundamentals of tax calculations, okay, at a very basic level, just to give you an idea. And we will look at some, examples and scenarios. Let's start by, basic steps of how to calculate income tax. There are three steps, okay. First of all, you have to calculate, or find your adjusted gross income. Then you have to find your taxable income, and then you will calculate your tax, okay, how much you pay. Now as far as your adjusted gross income goes, that is basically your gross income is all the income for the year, everything, every single penny you make, okay, from every source. That will be your gross income minus adjustments. It includes, if you have any tax deferred accounts or any other adjustments like that. Okay, so if you find the difference of the two, that will give you your adjusted gross income. Next thing is, you have to find your taxable income. Thus your taxable income is whatever you got from the first step, the adjusted gross income, minus any exemptions and deductions. Okay, so you can have personal exemptions, you can have some medical bills, some other taxes, other deductions, so you can do that. Okay, finally you will calculate your tax. How will you find your tax? It will be the tax calculated on your taxable income minus if you have any tax credits. For example, some solar tax, or child tax, some credits. Okay, whatever the credits are. So these three are the basic steps here: finding adjusted gross income, finding taxable income, and then you calculate the tax, okay, using the tax bracket where you fall. um, I think the things can be explained more easily if we look at example here. This example is about gross income, adjusted gross income, and taxable income. How to find those three things which we talked about in the previous slide. Okay, for example, a single man, you or myself, okay, a single man earned a salary of 46,500. He received $1,850 as an interest from his savings account. Received $15,000 from winning on a television game show or lottery or whatever. Okay, and then he contributed $2,300 into a tax deferred saving plan. He's entitled to a personal exemption of $3,800. The interest on his home mortgage was $6,500. He paid $2,100 in property taxes and $1,855 in state taxes. Okay, and he contributed $3,000 to a charitable organization, to a charity. This is all the highlights of his whole year. This is what he did. Okay, what he made, what he earned, what he won, where he spent, and everything. Okay, now our first goal here is find the man's gross income. Okay, second thing is we have to find the adjusted gross income. Third thing is you have to find the taxable income on which we will apply the percentage that tax and calculate how much he owes. So let's go after the first part here. Again, this will stay there. This is the whole summary of what he did. Okay, so our goal is first goal is to find the gross income. Okay, the gross income refers to this person's total income, which includes wages, interests, winnings, lottery, whatever. Okay, from every source, whatever he made, that will go into this part here. Okay, so this is what this is his incomes here. Okay, so 46 is salary, 1850 has his interest from the saving account, 15,000 from the lottery. Okay, so add them all up and you will get your gross income. 46,500 is salary, 1850 his interest, and 15,000 from a television game show. Okay, so if you add all them up, and then that will give us 63,350. Okay, so this is his gross income. First part done. Now let's move on to the second part. Second part says that find the man's adjusted gross income. Okay, adjusted gross income, if you remember, this is the gross income minus the adjustments. Okay, the adjustments in this case are his contribution of $2,300 to the tax deferred saving plan. So just subtract that and you have your adjusted gross income, which is comes out to be $61,050. This is your second part here. Okay, now let's move on to the what is his taxable income. Okay, taxable income, again, to remind you, we need to subtract exemptions, deductions from the adjusted gross income to find the man's taxable income. Okay, exemption is this one here, this personal exemption. Okay, at $3,800, and deduction is all these are deductions here. Okay, so let's first find the total deductions. So everything given here and here, okay, add them up and it comes out to be $13,455. Okay, now to this we will add the personal exemption. Okay, so this part is going on. This is his taxable income, which is adjusted gross income minus exemptions. Okay, the personal exemption $3,800 and deduction which we calculated on the previous slide. Add these two up and subtract from this one and you will get 43,795. This is your taxable income, your or his taxable income. Okay, he has to pay taxes on this amount here. Okay, now this is not his tax. Okay, this is not his tax. This is his taxable income. Now what will happen, how we will calculate the actual tax? To calculate the actual tax, we need a tax rate. Okay, there's a tax rate for different earning groups. So if you're making more than a million, there's a different tax rate for you. If you're making less than 10,000, there's a different tax rate for you. Okay, so we'll find the tax rate and then we'll multiply that that tax rate, which will be in percents, to this taxable income, and that will give us how much tax he owes. Okay, now just for your information, here is a table which shows the tax rates, and as I said earlier, the tax rates depends upon um, how much you make and your marital status here. Are you single, are you married, are you filing single but still married, or you are whatever it is. Okay, so those four categories: married, divorced, legally separated, married, each partner files separately, married, filing jointly, unmarried and paying some of the cost supporting child or something, right, parent. So just to give you an idea, as in for a person in our previous example, if he's single, okay, and he's making somewhere between around 40 plus, okay, so he's in this time here, so his tax bracket is 45% here. Okay, the way the tax is calculated is his first $8,700, it will be a 10%. Okay, so you'll multiply 0.1 to his first $8,700, and then whatever you make above $8,700 up until 35,350, it will be 15%, and then whatever is left over, that will be your last higher tax, which will be 25%. Okay, we'll come back to this table again. Let's look at this example here. Suppose you want to calculate a tax on owed by a single woman with no dependents, whose gross income, adjustments, deductions, and credits are given in this table here. Okay, and they said that tax rate, use it from the table from the previous slide. Now this is what our her finances are. Her gross income is 62,000, adjustments are 4,000, and tax credit for something, I don't know, maybe put a solar system or child or something, whatever it is. It's a tax credit she has. That's $500. Okay, or maybe for buying a hybrid car, I don't know, whatever it is. Okay, and her deductions are here given to us as this one. 7,500 as a mortgage interest, 2,200 as a property taxes, 2,400 as a charitable contributions. Okay, and 1,500 she paid for medical expenses not covered by her insurance. Okay, now let's look at it. All the three items of our calculating the tax. First of all, we need to find her taxable income, which is the adjusted gross income minus the exemptions plus deductions. Okay, when we have taxable income, then we will use the table given on the previous slide to find the correct rate. Okay, so let's start finding the adjusted gross income first, this piece of the puzzle. Okay, so it is gross income minus the adjustments. Okay, adjustments are 4,000. Okay, given to us, given to her like this one here. Adjustments are 4,000. Okay, and her adjusted gross income comes out to be $58,000. Now we'll go on to the exemptions and deductions. Okay, so this will be her taxable income. Okay, deductions are all these here. Okay, so this is exemption. Her personal tax exemption is $3,800. Okay, but deductions, we need to add all these up. Okay, but you need to pay attention. According to the tax laws, the medical expenses, if they are less than 7.5% of your adjusted gross income, you cannot count those into the deductions. Okay, it has to be more than 7.5% of the adjusted gross income. So they all the deductions, they come out to be $12,100. Put that into this one. Okay, and you again solve this whole equation. You have 58,000 minus personal exemption 38 plus this one here. Okay, and it comes out to be $42,100. This is her taxable income. We have to apply tax on this one here. Okay, but you need to keep in mind she also has a $500 tax credit, which we will take care of it at the end. Now let's calculate her tax, income tax. Okay, so first of all, I instead of putting the whole slide 11, I'm just putting the the relevant part here. She is unmarried. Okay, filing separately, single. Okay, so she is into this bracket here, because since she makes something 40 something. Okay, so her tax rate is 25%. Okay, since the single woman taxable income is 42,100, and she falls in the tax bracket of 25% here. Okay, and now her tax will be calculated as follows. 10% she will pay on her first $8,700 of her taxable income. Okay, and then 15% between 8,701 to $35,350, and then 25% on anything above than 33,350. Okay, so let's look at the final numbers. Okay, so her tax will be 10% of first 8,700. So 10% is written in decimal. We'll multiply these two. Okay, and then the green part is anything above this and below 35,350. Okay, so when you work this thing out, there will be that part, and then eventually she will be paying 25% tax on anything she makes above 35,350. Okay, When you calculate this, multiply this one out, add these two, subtract these two and multiply with this one, subtract these two, multiply with this one. Okay, so going, doing this multiplication using a calculator, her taxes come out to be $6,555 fair and square, no cents. Okay, now finally, as I mentioned earlier, don't forget she also has a tax credit of $500. So this much she owe. Now we will subtract that tax credit out of this one, and that much money she owes Uncle Sam here. Okay, so this is her taxes. So the income tax owed by her is $6,055. Okay. Now I think I included one or two questions into your homeworks regarding this, Social Security and Medicare. Okay, and now these are calculated using this table here. Okay, so if whatever your salary is, okay, if you on your first $110,000, it is 5.65. Okay, and anything you make more than that, okay, it will be 1.45 of that income, 1.45% of that income. Okay, instead of looking at this table is just for your information. Let me look at an example here. If you are not self-employed and earn $150,000, what are your Social Security and Medicare FICA taxes? Okay, so from the table, which I said, you don't need, I put it for your information. Your tax rate is 5.65% on your first $110,000. Okay, and then 1.45% on whatever you make above this one here. Okay, so to calculate it, it will go like this one. 5.65%, and if you write it in decimals, it is 0.0565 times 110,000 plus whatever is you have in excess of that times 1.45%, which is written in decimals here. Put these numbers, work them out, add them up, and this much Social Security and Medicare will come out to be $6,795. Okay. Thank you very much. This lecture was about taxes, income taxes, and Medicare and Social Security taxes. Okay. Simple calculations. Everything is based upon percentages. Make sure to try the homework problems. Look at the lectures. If you don't understand anything, email me, call me. I will try to help you out. Thank you. Bye bye.